The man who built the biggest corporate Bitcoin pile on earth just sold some of his Bitcoin at a loss. And he didn't do it because he had lost faith. He did it because he had no other choice. That single sentence contains the most important lesson in investing, and almost nobody watching this week's headlines is going to catch it. So let's catch it together. Three stories, and in 10 minutes, you're going to see the market completely different. Here's what happened. In May, Michael Saylor's company, MicroStrategy, announced that it had sold 3,588 Bitcoin. That's equivalent to $216 million worth. Now, you've got to understand what a big deal that is. For 6 years, Michael Saylor's entire identity had been just to accumulate Bitcoin. Buy more, never sell, and he turned that company into the largest corporate holder of Bitcoin on the entire planet. And he did it by treating selling as basically a moral failure. So why did he sell now? Well, it's because of a promise he made to somebody else to fund all that buying. That's all it is, guys. Strategy, they issued a stack of preferred stock, things with the names of like STRC, STRF, and all the other ST ones that they did. And those come with dividend obligations. These are non-negotiable ones. So STRC, they pay a variable rate sitting near 12%. Others pay 8%, some pay 10%, but every quarter, that money has to go out the door. And here's the trap. Because Bitcoin doesn't pay you anything to hold it, it generates no income. So a company whose treasury is basically all Bitcoin, they have no organic cash flow to service those dividends. The asset itself can't pay for its own bills. So the bill came due. That happened in late May. They sold 3,000 odd Bitcoin, about $216 million worth. It's so tiny compared to the massive stack that they have. That was the moment, though, that the never sell pledge actually broke. And this month, they did it again, but 100 times bigger. But here's the bit I want you to hold on to, because the headlines, they kind of skated straight past this piece. They sold an average price of about $60,000 US. Now, Strategy's average purchase price across their whole stack, it's around $75,000 US. So he actually did sell at a loss. Now let's read that again. The most conviction-heavy Bitcoin holder in the entire world was forced to sell his best asset, the asset that he always talks about, at the worst possible moment. And this wasn't because he was wrong about Bitcoin. This was simply because his obligations didn't care what he actually believed in. Bitcoin dipped below 62,000 on the news before clawing it back. Now, in fairness, Saylor has been consistent. The strategy, it hasn't really changed, but he said back in May that the goal is not a rigid never sell rule. It's never becoming a net seller. His words were something in the effect of, even if we were to sell one Bitcoin, we'd be buying 10 to 20 more Bitcoin. And they still hold 843,000 coins. So that's quite a large percentage that they still held. So this sale was way less than even 0.5% of the entire pile. So what is my read? Well, purely my opinion, this isn't advice or anything like that. I wouldn't be at all surprised to see them buying these coins that they sold back over the next 6 to 12 months. Nothing about Michael Saylor's thesis is broken. What broke was the timing, and the timing wasn't of his choice. Remember, the greatest holder in the game had exactly one move available to him, and that was to hold. It was as simple as that. But when holding stopped being possible, he was forced to sell into weakness. Now, think about who else was in that market on the same day, looking at the same candle. A trader. Now, a trader wasn't forced to do anything, because a trader, they have two moves, not one. A trader can position for a market going up, and a trader can also position for a market going down. with the same asset, same news, same day, but the opposite outcome. One person is a forced seller at a loss. The other, the trader, is a willing participant with a plan. That is the entire difference between an investor with one strategy and someone with a skill. Now, I've always been a big fan of being a long-term investor, and that hasn't changed, but that doesn't mean that you can't always accumulate new skills. And here's the part almost nobody tells you. Markets, they don't fall the same way that they rise. Tom DeMark's research on price behavior found that downtrends, they tend to accelerate somewhere around that kind of 2 to 2.5 times faster than uptrends. Now, why is that? Well, it's quite simple. People accumulate slowly over months, and they do it via dollar cost averaging, right? And they don't exit slowly. They dump the whole position at once. Greed is a drip, fear is a flood, which means this: the fall, the thing that everyone dreads, the drop in price, is the fastest moving part of the entire cycle. If you only know how to profit from things going up, then you're sitting out the fastest movement the market ever offers you. You're watching the flood and you're calling it a disaster, when a trader is looking at the exact same flood and they're calling it an opportunity. I want to be honest with you, because I don't do fairy tales on these episodes. Trading does carry real risks. There's no doubt about that. Of course, you can lose money, but getting the direction wrong in a fast market punishes you fast in both directions. The skill is what separates opportunity from wipeout. There's no version of this where the skill is optional. Which brings me back to the question I asked last week, and I keep coming back to it because it's the one that reorganizes your entire life. If I lost everything tomorrow, the accounts, the house, the coins, everything, what would I do and how would I rebuild with it? I'd rebuild with trading. Not because it's easy, because it's the one skill that works in every market condition, in every asset class, in any economy. Crypto, shares, commodities, currencies, bull market, bear market, sideways movement. Property needs prices to rise. A business needs customers spending. A job needs an employer who still wants you. But trading just needs the market to move. And the market always moves. It moves fastest, as we have just covered, when everyone else is panicking and the price is dropping. Michael Saylor is one of the wealthiest, one of the most sophisticated capital allocators alive in the world. And he still got backed into a corner by a market falling because his asset was money. My asset is the skill. They can take everything I have. They cannot take what I know how to do. And here is what has changed. This is why I think this window matters more than any that I have seen in 8 years. Right now, people are absolutely terrified that AI is going to take their jobs. And look, for some roles, that fear is well-founded, okay? But watch the symmetry of all of that. The same technology that is automating jobs is also collapsing the barrier to entry on trading. So what took me 8 years of screwing it up and blowing up accounts and paying tuition to the market, the pattern recognition, the discipline, and the ruthless execution without emotion is what changed all of that. And the other big thing is the massive advancements in AI, especially over the last year or two. That makes this whole system now systemized, right? It makes it automated. It makes it being able to run without you staring at a chart at 3 a.m. in the morning. The tools that threaten your income are the same tools that can actually rebuild it and create you an entire new income, but only if you move toward them instead of running away from them. That is the whole thesis behind what we've built here at New Rich Academy. And I took the strategy that came out of those 8 years, the Freedom 5 strategy, and I've automated the entire thing. It runs through a third-party platform, executing the strategy without you needing to become a full-time trader or do anything like that first. It's the shortcut through the apprenticeship that I never had. Now, I'm not pitching to you today. I'm just telling you what I do and what I did do. So, your signal for the week. Michael Saylor did not get beaten by Bitcoin. Michael Saylor got beaten by having only one move. Every asset you own comes with obligations, comes with timing, and comes with conditions attached to it all. And when those collide, the asset decides for you. A skill never does. A skill gives you a second move. So ask yourself, honestly, in a falling market, do you have a second move? Or do you just have hope and hope only? So one action this week, go and look up what a short position is. Just conceptually, right? A short position, just to be really quick, is when the market drops, okay? How does a trader position for a market going down? 20 minutes. That's all it is. You don't have to trade it. You don't have to like it. I just want you to know that it exists, because the day you understand that a falling market is still a market you can work in, something permanent changes in how you see risk. That is free, right? Completely free for you to do. So go and do it. The comment of the week I want to say, which I read, was, Troy, so you're saying I should have shorted my own portfolio. Mate, I'll tell you this right now. I'm saying you should have had the option. That is the difference. Thank you for now. Remember, build the asset that they can never take. See you next week.